My dear friends, welcome to Rajashekhar classes. This is lecture number 127. In this lecture, we will try to understand Wyckoff's three levels of observation. Let's recall what we discussed in the previous lecture. Let me say on day 1, we observe a green candle with good volumes. Means just let me say this is green candle, it's the volumes, isn't it? Means a green candle with good volumes means what? It is a positive sign. What happened on day 2? On day 2, a wider spread candle forms with increased volume. What it shows, showing that both price and volume are rising. Price and volume are increasing, which indicating strength. Just see, this is more wider spread green candle with high volume means what? It indicating strength. What happened on day 3? On day 3, the candle is even wider than day 2 and the volume continues to rise when both price and volumes move upward together over consecutive sessions. It confirms what it confirms? It confirms bullish confirmation, isn't it? Why? Because these on day 1 we have green candle with particular volume. On day 2 you have more wider green candle with increasing volume. On day 3 what it indicates, it even wider spread candle with increased volume means it confirms bullish momentum, isn't it? Bullish it generally, such setup generally indicates a bullish confirmation, and these are the trades we often prefer to take. However, if stock market analysis were always this stock market analysis is not that straightforward. Everyone would, if it is that straightforward, if it is that simple, everyone would make money easily. In reality, the market often creates traps. What it creates? This market often creates traps, and even technically skilled traders can fall into them. Now, let's look at another scenario. Let me say on day 1, we see a candle with a decent volume. On day 2, what happened? There is a widespread candle on day 2 and price increases but volume decreases. That's important. On day 2, wider spread candle but volume is decreasing, isn't it? On day 3, the price continues to rise. Just see, the price continues to rise on day 3 but the volume decreases. Here what's happening? Here volume is decrease. Volume still, price continues to rise but the volume still declines. Here the key point, when the price rise but volume fall, it suggests that market makers, what are the market makers? Market makers means what? FIIs, DIs or large investors are exiting their position at higher levels. The public sees the price rise and assume a continued rally, but in reality, the big players are distributing. This is what we call a bull trap. Prices rise temporarily while smart money exits, eventually leading to a price fall later. Let's take an example. Just see, this is Tata Motor old chart. Assume the stock was moving within a range, and then let me say this is something like trend line. This is Tata Motors chart. I discussed what is trend line long back. Assume the stock was moving within a range and then broke a trend line on the upside. Many traders would interpret this breakout as a signal to buy, expecting that the uptrend to continue. But if you zoom in, just let me zoom in this one. If you notice that as price rises above previous highs, the volume steadily decreases. Just see, price is increasing but volume is decreasing, isn't it? A clean signal, it's a clear signal of a trap zone. We already learned that a white or green candle forms with large upper wick and small lower wick and above average volume. It often indicates a trap information. Just see, here I have a wide candle, upper wick and lower wick, and this is just something like this one. Just see, this is wide candle, wide green candle with long upper wick, lower smaller wick low side, means this just see this information. That's what we have already learned, that when a white or green candle forms with large upper wick, a smaller lower wick and above average volume, that is important. Just see, this is above average volume. What it indicates? It often indicates a trap formation. This is trap, this one is trap. That's what I am writing here. Yes, this is trap formation. Yes, again, what it says, let me repeat. We have already learned, when a white or green candle forms with a large upper wick, a large upper wick, a smaller lower wick. This is large upper wick, this is smaller lower wick, and above average volume. This volume is above average volume. It often indicates a trap formation. In such situation, it is wise to exit early. You must exit early rather than holding through the subsequent declines. Unfortunately, most retail traders do the opposite. They enter at the highest levels when the big players are exiting. By recognizing these trap patterns early, you can protect your profits and avoid unnecessary losses. Understanding bear traps and Wyckoff 3 levels of observation. Just as we observed trap on the bullish side, now we already understand the trap and bullish side. Similar trap can occur on bearish side, isn't it? On bearish side as well. Let's understand this example. Let me say this is day 1 information. On day 1, a stock forms a red candle with certain volume. This is day 1 information with certain volume. On day 2, the stock price declining. Just on day 2, the stock price declining further, forming widespread red candle, but the volume decreases compared to day 1. That's what it says. Volume is decreasing compared to day 1. On day 3, the price continues to fall again, forming red candle with lower volume than previous day. When the price is falling but the volume is also declining, it indicates a bear trap. It is a bear trap. I can say it is a bear trap. In such case, market movers accumulate the stocks quietly, and soon after the price reverses upward, allowing them to enjoy profits after the reversal. Let me check one chart, ICICI Bank chart. This is old ICICI Bank chart. In ICICI Bank chart, we can observe a clear uptrend. But at one point, a trap is formed. Here, trap is formed. It's a clear uptrend, isn't it? This region is trap region, isn't it? If you look closely, you can see, just see, I will repeat, in the ICICI Bank chart, we can observe a clear uptrend, but at one point, a trap is formed. How do we identify this trap early? If you look closely, you can see resistance line. Just see, this is trap in trap zone. This is resistance line. This line is resistance line, where the stock price faced multiple rejections. Once this resistance line is broken, a buy signal is generated. However, sometimes this breakout is false. It creates a trap. After breakout, 3 consecutive, just see, after this breakout, 3 consecutive, the first one, second one, third one. This is breakout, isn't it? This is breakout. After breakout, 3 consecutive red candles appear and form the next candle onwards. The price reverses. Just see, the price reverses from it is created a bear trap, isn't it? How do we confirm these three red candles represents a bear trap? Because as we discussed earlier, when the stock price is falling but the volume is consistently declining, it signals selling pressure is weakening, a classic indication of bear trap. After this trap, the stock tends to rise again. In the same ICICI bank chart, notice a big upper wick. Just see here it's your upper wick and lower wick with high vol. This is as we are saying. Just see this one. This is actually on day one. What's happening here? That's what I am discussing. Same thing here. Trap is formed. Isn't it? How? Because as we discussed earlier, when the stock price is falling but volume is increasing, that's what happening here. After this trap, the stock tends to rise again. This is trap, day 1, day 2, day 3, isn't it? Here after this trap, after this trap, stock price is increasing. Just see here. Yeah, that's what happening here. After the trap, stock price is increasing. In the same ICICI bank chart, notice a big upper wick. Just see here, I have a big upper wick with high volume. Here volume is also high. Big upper wick with high volume. This could indicate a potential trap zone. That's why I'm writing here trap. By carefully observing a single or multiple candlesticks, we can identify market traps easily, isn't it? How to escape from the traps? Escaping market traps using Wyckoff's 3 levels. What are those levels? That is, Wyckoff taught us to study the market in 3 levels of observations. First one is minor level, second one is major level, third one is global level. At the minor level, what happens at the minor level? At the minor level, we analyze single candlesticks along with their volumes. For example, it is a widespread green candle. It is a single one. It's a widespread green candle forms with high volume. If it is high volume, that's what I'm saying here. High volume with the widespread green candle with high volume indicates bullish confirmation. A narrow spread candle appears with high volume. This is narrow spread candle with high volume. What it suggests, it is bearish confirmation, isn't it? I can say a doji candle, even a doji candle with high volume indicates indecision. These things we already discussed long back. Just try to recall all these single candlesticks and for informations. This is if you recall, this is if you analyze for single candlesticks, I can say this is the bullish confirmation. This is high volume, this type of candle, bullish confirmation, high volume, this doji type of candle, trap. This one is also trap. This one is also trap. So this levels actually this level gives us only 1% to 2% understanding of the market. It helps in trade identification but not trade execution. We should not make trade decisions solely based on single candle analysis. What about major level? At major level, we analyze multiple candlesticks together. We compare price and volume movements over several days. That is important. If the price and volume both increase over consecutive days, it confirms bullish trend. If price rises but volume falls, it may signal weakness or I can say trap. Though this multiple candlestick analysis, we can again, as in single candlesticks, it is useful only 1% to 2% understanding, whereas in this case means what? In the case of major level, it will give only 10% to 20% of understanding of the market level. What about third one? Global level. At the global level, we analyze the broader market structure, including support and resistance zones, supply and demand levels, accumulation and distribution areas. By combining all these observations, we can understand nearly 70 to 80%. This global level will give 70 to 80% of the market behavior. Remember, in minor level, you will get 1 to 2% understanding. In major level, you will get 10% to 20% of understanding. In global level, you will get 70 to 80% of understanding. What is global level? At the global level, we analyze the broader market structure, including support and resistance zones, supply and demand levels, accumulation and distribution areas. We are saying in global level, one can have 70 to 80% of understanding the market, but no one can understand 100% of the market. Only God can understand. Let us take one simple HDFC Bank old chart. This is 2024 charts. Let's take this chart. This chart is from 24th June to 3rd July. This is 24th June to 3rd July. If you observe this particular chart, a total 8 trade days. There are 8 trade days. On day 1 and day 2, we see a clear bullish sentiment, isn't it? Just see. On day 1 and day 2, we can see a clear bullish sentiment, price rising with the increasing volume. On day 3 and day 4 and day 5, price declining. Just see 3, 4, 5. Price is declining and volume decrease, forming a bearish trap. After this trap, the stock reverse uptrend, isn't it? The stock reverse uptrend and resume its uptrend. Now, observe, after uptrend, a big red candle. This is a big red candle. Just say after reverse uptrend, a big red candle appears with high volume. That is important. It is high volume following a gap up. Question. What is my question? Question. Will the stock price increase? Will the stock price increase or decrease after this red candle? Use the knowledge you have learned about price volume relationships and trap identification to make your judgments. Then go to HDFC Bank chart and verify your analysis. You can check this, what happened after 3rd July 2024. In summary, I can say declining price with decreasing volume, bear trap. Rising price with increasing volume, bullish confirmation. Wyckoff levels helps in identifying trap and confirmation. There are minor level, which is analyzed for single candlestick one, major level, multiple candlestick analysis, global level, support, resistance, not only candlesticks, you can check support and resistance and market structure. By mastering all these 3 levels, you can anticipate traps early and make information. By mastering all 3 levels, you can anticipating traps early and make informed trading decisions with confidence. Thank you so much.